In this week's recap, stocks rise as earnings season winds to an end and no results in fiscal stimulus talks. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Overlooking stalled efforts by Congress to pass a new fiscal stimulus bill, stocks marched higher last week with the Dow Jones Industrial Average leading the way and the NASDAQ Composite setting multiple fresh record highs. The Dow Jones Industrial Average gained 3.8%, while the Standard & Poor's 500 rose by 2.45%. The NASDAQ Composite Index climbed 2.47% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, advanced 2.31%. A string of encouraging news reports, including a decline in new COVID-19 cases nationwide, pushed stock prices higher throughout the week. Stocks also rallied on signs of a pickup in manufacturing activity, factory orders that came in well above estimates, and a better than expected new jobless claims number. Congress was not able to come to an agreement on a stimulus package, which disappointed some investors. But it wasn't enough to slow the daily climb in the equity markets, with the NASDAQ Composite Index closing above 11,000 for the first time, while the S&P 500 index closed on its record high set in February of this year. Stocks then drifted on Friday, even though the employment report showed that employers added 1.8 million jobs in July, lowering the unemployment rate to 10.2%. The continued rally in stock prices appears to suggest that the U.S. economy may maintain its recovery through the second half of the year and into 2021. But the bond market and gold prices suggest a different outlook. Last week, the yield on a 10-year Treasury touched their lowest level since early March, signaling that bond investors may be less convinced about economic prospects. Meanwhile, gold traded over $2,000 an ounce. While the rise in gold prices this year has been largely propelled by historically low interest rates, its reputation as a store of value has attracted investors worried about stock market volatility and a potential uptick in inflation. It was reported last week that the U.S. and China agreed to meet by video conference on August 15th to discuss compliance with the terms of the Phase 1 trade deal. With tensions running high between the two nations, expect Wall Street to keep a close eye on any developments that may appear connected to the virtual meeting. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. To learn how I give my clients' life savings the attention it deserves, visit me online at www.erichagan.pro. If you'd like to get financially organized, go check out nocostfinancialdashboard.com. And lastly, if you'd like to take control of your 401k at work, visit us over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.